Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil.
Hello and welcome. Before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or on any related items on these, my charts. This was all my own original work because I think you deserve to have that. So with that, Paris Rapeseed. We had two patterns and it looks like these two patterns are just about complete. The first pattern is an overextension of the bright red neckline, currently at 458, of the May to August 2025 head and shoulders pattern. Today this pattern now looks like, as I said last week, a head and shoulders continuation pattern. The previously mentioned bright red neckline also shows up in the second pattern. In this case, it acts as a lower trend line with a nearby bright green upper trend line, currently at 467 3/4, together forming a shallow July to October descending wedge pattern. This pattern is very shallow and consequently narrows at quite a slow rate. Plus, it would not reach an apex until early next year. However, as I said 2 weeks ago and since, and I quote, I do not expect the market to wait till then, nor expect the market to make a clean break, as the chances of a false break are now quite high, so caution, end of quote. That all being said, we have last week seen a break on the upside, and as I said last week, and I quote, I feel obliged to lay out, if not targets yet, then potentials. Thus, a primary potential will be up in the 489 3/4 area, with a secondary harder to reach potential up in the 502 even area. Of course, if this becomes a false break on the upside, then I'll retire these potentials in a heartbeat. End of quote. Today I have solidified those potentials into target X at 489 3/4 and target X1 up at 502 even. This week we have seen prices move up and away from this descending wedge pattern, but also get caught between the mauve medium moving average, currently at 477.5, with further up the combination of declining gold long moving average, currently at 481.25, and the dark blue neckline extension to the August to September 2024 reverse head and shoulders pattern, which is currently 482 3/4. Pushing above the gold long moving average, and especially the dark blue neckline extension, will be key to any attempt higher. I know it's doing that now, but it will be key to any attempt higher. However, if prices stabilize below the mauve medium moving average, then the pressure will be to try and push back down to the bright green upper trend line. One further key factor to remember, and it may eventually become a deciding factor. We are set up here for a monthly key reversal for October in Paris Rapeseed. Thus, if we close either over 469 even or under 465 even, then we would be on. Anything in between, it would have a lesser outside month pattern. Right now, we are looking at a monthly key reversal up. Winnipeg Canola. The key recent pattern here has been the fairly obvious bright red late June to date bear channel, currently 579.10 to 627 even. The most recent action has seen the market 5 weeks ago spike down to the May 2023 low at 611.10 and bounce up from there, though not by far, as it seemed the pattern came to it rather than the market moving to the pattern. Though it did lead to prices testing and finally piercing last week and this, the bright red upper bear channel line, and pushing up over the 2021 low at 629.5. as well as the lesser Fibonacci line at 632.90, and yesterday and today challenging the green short medium moving average, currently at 640.20. We're just above it at the moment. Thus, we're out of the bear channel, but we have not as yet fully stabilized outside of it. Looking above, we have the 50% Fibonacci line for the whole 2025 move at 655.70, which ties in with the June 21 low at 655.90. And above that, we have the flatlining gold long moving average, currently 662.90. With above that, the declining mauve medium moving average, currently at 669.60. And then the dark blue neckline of the earlier mid-April to mid-August head and shoulders top, which is currently at 678 even. It's quite a lot of layered resistance above. This head and shoulders pattern that I've been speaking about is a complex head and shoulders pattern, a really ragged one as well, with a break lower back in mid-August and a given primary target down in the 630.80 zone, which was reached in early September, and a secondary harder to reach target X down in the 585.50 zone. I said last week about this secondary target X, and I quote, "I'm minded to start considering retiring this harder to reach secondary target below," end of quote. Well, this week, after this commentary, I will. This just leaves us with potentials topside for the break out of the bear channel. Now, the following are potentials, not targets, as it's still too early for targets, but a primary potential would be at 680 3/4, with a secondary hard to reach potential at 720.5, and possibly a tertiary much harder to reach potential up in the 751.90 area. As said, these are at the moment not targets for the pattern, just potentials. Bursa Malaysia crude palm oil. To start with, as I've done for many months now, I'd look to the wide congestion that's overhead between 44.08 to 45.59. We've tried within the last 3.5 weeks to pierce it and failed, with prices this week punching down through the lower edge of this congestion, as well as the green short medium moving average, currently at 44.10, and these last few days down through the gold long moving average, currently 42.92, and the mauve medium moving average, currently 42.81. Prices have dropped down to a wide congestion zone made up from the 38.2% Fibonacci line of the May 20 to March 22 move, and the 50% Fibonacci line of the May 23 to December 24 move, both at the same 427 level, along with the 38.2% Fibonacci line of the July 19 to March 22 move at 42.39, and finally the July 23 high at 41.89. The recent overall pattern here had been the broken bright red May to September bull channel, which is currently 45.89 to 48.35. This had been broken in late September, though the market had still not managed to fully let go of the lower broken bull channel line until 2 weeks ago. Thus, targets for this break lower are at a primary target down in the 42.61 zone, with a secondary target down in the 42.53 zone. As you can see, both primary and the secondary targets have been achieved, leaving the downside somewhat in limbo. But if we look at the whole August day action as a possible double top, or even a triple top, then we have potential still available down to a primary target of 41.18 zone, with a secondary harder to reach target X1 down in a 39.40 zone. Another feature to watch out for is that we are set up already for a possible monthly key reversal here. That's if prices close tomorrow night either over 43.47 or under 43.24, then we'll be on. Anything in between and would have a lesser outside month pattern. Right now we're looking at a monthly key reversal down. Now, I've also drawn a small August to October bearish Andrews pitchfork on this daily chart. I'm not swearing by it, as I might have to finesse it to a shallower bearish shift pitchfork for the same move, but for now it will do. The market is right now just under the middle time, which is currently at 42.73. There's one further feature which I would like to discuss, and this came about because I was at the end of June speaking about it at in a presentation at the Biofuels International Conference and Expo in Brussels, Belgium. It was and is to watch out for a key level from right now until the end of this year, and that level is 35.99. I've highlighted it on my daily chart. I know it's quite a way below the market, but still nevertheless it is important. You see, if prices push down below 35.99 before the end of this year, which even now is still possible, then we would have set up the conditions here in palm oil to make that rarest of patterns an annual key reversal, with all the implications such a huge longer term pattern may have. Please watch out for this, as it is important, and I'll bring you more details should we get down below there, even though I know, as we are today, many hundreds of ringgits above it. Just please bear it in mind, as we still have a few months of this year to go.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.